Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for a very volatile day of trading on this Tuesday evening, November 8th, 2022, and it's 6:40 p.m. Central Time. Okay, I don't know who's going to win these races, but I look at it personally that if the House and Senate are lost, it's a vote against President Biden. Don't run. That's basically what the market will tell you. If one of the houses surprises and isn't taken over, Biden probably runs. As for President Trump, he's waiting in the wings probably to say that he is running again. Wouldn't surprise me. How the races are going to go, do we find out everything tonight? Probably doubtful. I think we'll get a lot of information. We'll get a good idea as to what is going to happen. But you know that they're already running to the courts, the different political parties in different states. Hey, you got to count those votes. I don't care if the date is wrong on the envelope. In 1960, this was a law that came in. I'm not a lawyer. I'm not a politician. We know the fights are going to go on. Okay, we saw that with the last presidential election. It just keeps going. Nothing changes. So we get that, and then you get the old Texas two-step. And what do I mean by that? And it's not a negative to my friends in Texas. It's that we're doing the dance here, and then we're going to dance this way with the CPI number that we're going to get on Thursday. The CPI is a monster number to me. Everybody's looking for the event where the CPI finally starts saying, oh, the Fed finally has done it, and we aren't really advancing in inflation. Everyone's going to pour within the numbers. Where is it? What they don't want to see is a sticky number. I'm of the opinion you're going to still have sticky numbers. That doesn't mean you can't slip in the number. It means it shouldn't fall. Slipping and falling are very, very different, okay? You know it. I know it. What if they're strong? If they're strong, it tells you that the Fed, I don't care who wins on this, the Fed's here right now. Those people have, whoever wins, have to get in office and control Congress and whatever, and have to be able to prove whatever they can do. And it's probably going to be hung up anyways. That's what it always seems to be for the past 10 years. Well, if that is the case, the Fed's what the game's about. And if the Fed sees inflation and their impact isn't going, they'll just go until they get it to that point. They're not going to stop. The number can be 5, 5.5, 6%, whatever it has to be. They're going to put the inflation genie down. I don't know they can get it back in a 2% bottle. I have my own doubts that they're going to succeed in that. Can they get to 4, 3%? I think that's much more realistic, and then we see whatever's going to be. The idea here isn't to kill the economy, it's to slow it down. So that's where we're at on that. Then you get the volatility in the Bitcoin part. Maturity comes with pain. And that pain for these crypto people has been monstrous. Remember, this was a $70,000 Bitcoin. It's up tonight, $300. It was $18,000 on the close. So it got hit again. Another big firm failing. They're trying to get a merger done. What if they can't? Who loses how much money on that deal? And then again, the pressure comes on. Natural gas, wild yesterday. Did you see the size of the rally yesterday? Did you see the size of the break today? This is not normal. And what is going on is the market is enamored with Freeport, Texas to a large degree. Let me explain that one. As I've said, in the month of November, the Freeport terminal, which exports about 16% of our natural gas, is due to reopen. Now, nobody said it was going to reopen completely, but it's due to reopen, whatever that means. Refinitiv, I think that's the name of it. They're a data tracker of ships. Forgot how I spell their name, to be honest. It's a name I'm not that common with. They claim there's 3 ships waiting outside the port now, and another 2 to 3 are on their way there. So the market's assuming that they're getting going, and yet a report today, quote unquote unofficial, the last news that I read, that they got to push back the date into December before they can load them up. Will those ships stay there? That's a long time. I mean, somebody's paying the lease on these ships to either sit or move on to other places where they can make the ship owners money. Don't know, and I don't know what it means if they delay it, but you go up dramatically, you came down dramatically. That's important. Metal markets, I like what copper's done. We keep hearing how bad China's doing and all the COVID cases, and they're not backing off. You're at 365 in copper. You're not in the 330s. You're in the 360s. You've held the vast majority of that one-day gain that we just had. That was on Friday. Big gain, 26 cents. You gave back yesterday, what, 8 cents? And today you gained again. I'm telling you, there's a lot going on here. So let's go see what that means. As I come to the S&P on a weekly chart of just closes, the line in the sand is the 18-week average of closes. When you're over it, the way I teach charting, you should have a bullish bias. When you're under it, a bearish bias. It's a filter. It's not meant to trade off of. It's a filter. The neutral line, the north and south line, the DMZ zone between North and South Korea, is the red number. You will run into it. There will be clashes at it. And that's what you've been doing. When you look at the chart, the daily chart, you can see how the market's been coming up. All right. Is it trending? No. Where I went to school and the way I teach charting, you have a higher high. That's what the line here in the red is showing, right there with the arrow, and a low that took out a prior low. You're doing this. You're swooning in the market right now. When I look at moving averages, you are over the 18-day average of closes. So I have an automatic upside bias, but I'm not trending. Where's the resistance then? Well, one of the numbers is the 100-day average at 39.17.5 roughly. And the Bollinger Band's the other one, and lo and behold, it is over that number at 39.31, but not far over it, 14 points. So that's a pretty good zone. If the market were to rally tomorrow because it likes what the election did, whatever that means, I couldn't begin to tell you if it's Democrat or Republican, whatever it likes, that would be the resistance. If the market gets back under this low of 37.04 it'd be quite bearish on the chart. It's a rough chart. When I look at momentum, it's useless to me. It corrected an overbought condition, and it's sort of drifting here. So let's go to the NASDAQ. This is the sell zone, not a buy zone. You rallied up to the 18-day average. Do I like the amount of dollar risk all the way up there? No, it's too far for me, but it is a resistance zone. And the market's really traveled from close to the upper Bollinger Band to the lower band and back to the neutral area of the 18-day average. In the process, it has corrected an oversold condition, the exact opposite. In the December, and I changed how this reads, the micro mini, so we can get the Dow reading there and it's not over everything else. You got a lower low, higher high, but lo and behold, something big is happening here. Let's go back a few days here to where both numbers begin and they're over the 80 level. For those of you that haven't taken my Bollinger Band course, you want to. So, as of last Friday, both numbers were not over 80. But as of Monday, both numbers were. As of today, they are. And the question is, can they close that way on Wednesday? Now, this is Wednesday's trade, and they certainly are there right now. If that occurs, this market becomes super bullish. So there you go. You got one market that could flip the card here. And in the Russell, you have a higher high, lower low. But this market has been fighting a battle since mid-October, where the market is sitting there saying to itself, I want to get over that 18-day average and I'm going to hold it. I have a bullish bias. It got up to the area of resistance of the 100-day, then the upper Bollinger Band, very close to the 200, and sitting here. Which way's the next move? I can tell you if it gets under 1758.20, you get an all-out sell signal the way that I teach charting, and there's nothing I can get on this chart that says you're going to get a new buy signal. That's the dilemma. In the VIX cash, okay, you've got the bearish embedded reading, the market coming up into a key resistance area, and you have an outside day to the upside. Now, that's interesting. So you get an outside day up on a day where you had good gains in the stock market. Which one is right? The VIX or the indices? Why do I say that? They don't typically go in the same direction. This falls when stock indices are bullish. This rises when they're due to be bearish. Which way are we? In the bond market, which way you're going to go with this for the CPI number. That's what the bet is. Which way do you want to go? The trend is certainly down. The trend is what? Neutral in the 10-year note. You've got higher highs, higher lows, but you're under the 18-day average of closes. In the dollar, you're down to, again, the zone where the market should find excellent support, but the trend is down. It's been down. You have lower highs, lower lows. That's not the bull trend that we keep hearing about. I hear analyst upon analyst, no, you've got to be bullish the dollar long term. Do you? Is the market not saying that the first time it sniffs, that the Fed sees that the CPI is slipping, not rallying, not staying strong, slipping, that they won't be ahead of the Fed in trying to predict, hey, let's not own dollars. Interest rates are going to have to slip back. We're near the end of those hikes. That will hurt the dollar. That's what I think that they're doing. Doesn't mean they're right. I don't know what the CPI is. Well, then the flip-flop is true of the euro. It's already making its move to the upside, and it's running into the 100-day average. I've given you the story as to what the markets are looking at going into Thursday and tonight's election. The chart is telling it to you, not me. They're very clear. You're in no man's land in the British pound, and you should be. We're waiting for the 17th when we get their budget. That's going to be the key. And how does that sit with Parliament? If it doesn't sit well, remember Ms. Truss, well, Mr. Sunak will be gone too. You've got to see what it is. This could be a revolving 10th Street door. Now what are they coming up with is going to be the key. Then we get to the energy markets, and the differential here is staying very strong. The differential between the Brent and WTI, Brent is still stronger. When you take a look at the energy markets, you lost the embedded reading. Did we have one? So let's take a look. If we come here, if this will work for me, I don't know if it will or won't. It's not going to. I can see what the top is doing. Don't worry about it. The market was trying to embed and gave that all up. That's what really happened. Same thing here. You didn't embed. You got overbought into key resistance. You're pulling back in these markets. These markets will look in a major way. And why were they down today? They're down because of the weirdest thing. You see the other markets going up and you have energy down. Energy's looking at China. And energy is saying China's the big buyer of this right now. And if they're locking their economy down, then these prices are a bit too high. And that's what I think the market is saying to you in plain English. In heating oil, we had the first threat of the cold. So you rally typically on it. I've been doing this since, I don't know, 69. I've been trading energy futures since literally they came on the board. And I've seen this. And I saw the same in the nat gas. The nat gas getting up there. What did I say yesterday? I had no idea. I don't think I mentioned once the Freeport issue yesterday. I just said, I think you got your cold weather spell. The market went there and the pros are going to bail. And that's what I think happened. All the rest to me is the nonsense. Why? Because the Bollinger Band studies were telling you that combined with the momentum. Do you want to see how I do it? Do you want to learn to do the same thing? You can do this. It's easy. It's not hard. How do you do it? There's a course right after this. It's under $100. I give you charting software with it that's worth $60. I give you access to my updates. That is worth another $28 on it, okay? That's what you're going to get. So it pays for itself right there, and now you got the course. And it's 13 chapters. You're going to be able to go through it over a 3-day, 4-day period, and your world, I think, will change when you look at these numbers in that way, and especially as you start applying it, and you visit with me each morning, and I reinforce it in you. So to find out more, take a look at this. Don't go away. I'm Ira. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.